Good day, everyone. This is your European Open briefing for Friday, September 16th. My name is Michael Florentiades. I'm the chief economist here at xm.com. These are the key points you should know about today. It's been a relatively quiet day in Asia so far, as we have holidays in China, Korea, and Hong Kong. We also have a holiday in Japan on Monday, so there is kind of dampening trading activity. The US dollar is nursing some losses versus the yen. It's below 102 right now on weak US data yesterday. Risk currencies are posting some modest gains like the Aussie and the pound. And the focus is on next week's Bank of Japan Fed meetings, obviously. Today's calendar, just United States inflation numbers for August and University of Michigan preliminary sentiment for September. On to retail sales, they disappointed yesterday. They were significantly below expectations. We had for the headline figure a minus 0.3% drop month on month. A minus 0.1% drop was expected, and a minus 0.1% drop for retail control, which adjusts the retail sales for certain volatile items. A growth rate of 0.3% was expected, and together with the miss in industrial production, this has reduced the already low probability of Fed action next week. Now the market is pricing around a 12% chance. Previously was pricing in around a 15% chance. And you can see that retail sales growth year on year is fairly modest. It's fallen just below 2% year on year, and let's say the core retail sales are well below 2%, 1.6%, so excluding food and motor vehicle sales, which have the yellow line is including motor vehicle sales and food, which has tended to boost the overall retail sales. However, the US dollar did not react too badly on this news. There was no discernible impact on the dollar index, for example, as euro dollar is the most important component, and euro dollar has been remarkably flat in the past few trading sessions. The yen seems to be gaining some ground on the view that the Fed won't move, but also that the Bank of Japan will not do anything next week. There was talk of rate cuts deeper into negative territory for Japan, but this is being challenged by some. There is the view that the Bank of Japan is essentially out of ammo, as negative rates are seen as ineffective, and there was a Reuters survey of Japanese corporates saying exactly that today. Now, this sentiment and this view is supportive of the yen, and dollar yen could challenge the 99 to 100 level again if the Bank of Japan admits that not much more can be done from its part to boost growth and inflation in Japan. On to the pound. The pound was unable to really sustain some gains on strong retail sales numbers and a neutral Bank of England meeting. Someone could even claim the Bank of England meeting was even supportive for the pound, as the bank acknowledged some improvement in the economy. It said it may still cut rates in November, but it raised its forecast for third quarter growth. Now, overall, it's worth mentioning that strong UK data didn't help the pound much, whereas weak US data didn't hurt the dollar much. And that's a point worth considering. It's very possible that the data was not seen as influencing the course of monetary policy in the short term. So it would take something pretty remarkable to convince, let's say, the Fed to raise rates in September. More or less, the market has decided that this decision has been taken. They were going to leave rates unchanged, so it's not paying as much attention to the data. It's possible that actually speeches from central bank officials and these statements are moving the markets more these days, more these days rather than the actual data. So that's an interesting point. Just to answer the question, why didn't the markets move more and reward or punish the currencies that were showing good or poor economic performance? It will be a quiet day today in terms of data. Again, we have US inflation for August. Headline is going to be 1% year on year, a rise from 0.8%, and core inflation is going to stay constant at 2.2% year on year. I have marked that with a star because 2.2% rate is relatively high. It's above the 2% target of the Fed. Of course, the Fed is looking at the PCE deflator, the personal consumption expenditure deflator, but one cannot say that 2.2% core inflation is really low and nothing to write back home about. So I think it is important and we should be watching this, although the Fed again is downplaying the importance of the CPI. And overall, this is the last number. We have a few housing numbers next week, but this is the last major number that the Fed officials are going to take with them into the meeting, the Wednesday-Thursday meeting next week. And finally, we will have the Michigan consumer sentiment. This is set to slightly improve in September from 89.8 in August to rise to 90.8. We will also get some inflation expectations 1 year and 5 year. That's all from me today. Thank you very much for watching and have a great day.